We live in a world brimming with relentless pressure to spend. In the midst of all these whims, how do you boost your savings, your chances of being financially free, and your worry-free nights? If you think you need a large paycheck or to build the next Walmart, then the good news is you're wrong. Even though a large paycheck or a successful business are fantastic ways to build wealth, if you spend more than you bring in, you're most likely headed for a financial future that only secures stress and anxiety. In this video, we'll take you through the importance of your savings rate, how to calculate it, and how to boost it. But before we start, if you like content like this, consider liking and subscribing. It really helps us out. Now let's talk about your savings rate and why it's the #1 predictor of your future wealth. Your future wealth is directly tied to the amount of money you save rather than the amount you earn. In fact, you could predict your financial future in 10 years based on your savings rate today. Forget about your total wealth for a moment. What truly matters is how your wealth stacks up against your living expenses. The higher your savings rate today, the more opportunity for your future wealth. What is savings rate? Your savings rate is the percentage of your income that you set aside for the future. Now, not all the money in your savings account falls into this category. If you diligently squirreled away funds in a special savings account earmarked for that dream vacation you've been craving, that's not the kind of savings we're talking about here. You see, that money is intended for consumption. So let's not confuse it with savings meant to boost your net worth in the long run. It's all about saving for the future. Here's what counts. Any savings that boosts your net worth, that's what we're talking about. Every dollar that increases your net worth should be considered, and that's what savings should be doing. Before we go further into savings rate and how you can calculate yours to see where you'll most likely be financially in the coming years, we need to start by establishing a mutual understanding of what your saving rate means. To do that, you'll need to understand the difference between gross and net pay. Gross versus net pay. Gross pay is the total amount you earn, typically over a year period. It's like the whole pizza before you divvy it up and share slices for taxes, deductions, and other bills. Net pay, more commonly called your take-home pay, is the money that actually lands in your checking account on payday. It's the amount you have left after the government and other entities have taken their share. To calculate your savings rate, divide your monthly savings by your monthly take-home pay. Multiplying it by 100 shows your rate as a percentage. So, for example, if you save $1,000 from a monthly take-home pay of $4,000, your savings rate is $1,000 divided by 4,000 times 100, or 25%. Go ahead and try calculating yours with your real numbers. Your savings, emergency fund, and investments, including 401k, IRA, and brokerage accounts, should all be considered. Naturally, your next question might be, is my saving rates good? How much should you save? Most financial advice tells us at least 20% of your income should go towards savings and investments. Remember though, the higher your savings percentage, the faster you can reach financial freedom and even retirement. The top 1% have an average savings rate of around 38%. But the truth is, in America, the average savings rate is around 6 to 7%. That's a large gap between the actual and suggested. So let's look at how we can boost those numbers. How to increase your savings rate. Now that we've calculated our rates, let's look at how we can increase it. Remember that the savings rate equation has just two variables, the money you make and the money you save. So if you want to increase your savings rate, there are two ways we can impact this equation. First, you can cut down on your expenses. This is the definition of living below your means. If you decrease your spending while maintaining your current income level, your savings rate goes up. Find clever ways to trim those expenses without sacrificing too much of your lifestyle. Let's look at a couple. The big three. When it comes to reducing your spending, it's time to shift your focus from cutting back on your smaller money habits to something a bit more substantial. Drop those cliche tips prevalent in personal finance about skipping your morning brew to save money. That could be part of it, but if you're serious about cutting your spending, you should start with the heavyweights in your budget, the main three expenses: housing, transportation, and food. Housing. Opt for the smallest home that still gives you the cozy vibes you crave. It's probably cheaper than you think. And if you want to be really aggressive with cutting housing costs, you could use house hacking. This is where you rent a room or even section of your home. The rental income could help you save more money. Transportation. One of the fastest ways to drain your wallet can be owning a car, particularly a new one. So considering how you can cut your transportation costs can go a long way to helping you increase your savings rate. If you have 2 cars, consider if you could become a 1-car household. And when it comes to choosing a car, go for a safe but economical ride that can reliably last you a long time. If public transportation is reliable in your area, consider if you can use this instead, or create carpool opportunities with friends and coworkers. The longer you can stay without a car or with your current car, the better. Food. This might be the easiest of the big 3 to immediately scale down. The main thing to do to reduce your food expenses is to have a weekly meal plan. This little trick will minimize your cost per serving and have you saving a lot more money on groceries. Cutting down on food expenses, eating out, and drinking are all fantastic ways to quickly boost your savings rate. Now, the second way to impact your savings rate calculation is to increase your income. Once you've trimmed your expenses and found your comfort zone, it's time to aim toward a higher savings rate by increasing the money you make. Explore opportunities to increase your earnings. One of the reasons many people struggle to save is that they spend their entire paycheck, saving only if there's anything left, which is usually wishful thinking. Here's the thing. Even with just one paycheck, there are ways to boost your savings. Some people automate their savings and spend what's left. But let's be honest, it's easier said than done. That's where the side hustle comes in. It's a chance to earn extra money outside of your regular job. And here's the beauty of it. Side hustle money is independent money. It's like having a special savings fund separate from your 9-to-5 check. Mentally, it's way easier to see it as extra savings and put it aside without hesitation. That's precisely what you could do with a side hustle to perfectly complement your regular paycheck. Every penny you earn from your side hustle can be channeled straight into savings and investments. Over the years, that side hustle income can grow into something extraordinary. We're talking about an ultra-high savings rate. With a really high savings rate, you're like a rocket blasting towards financial independence in record time. It's like a fast path to reaching your financial goals in just a few short years. Consistency. Now, we know that the idea of achieving a really high savings rate might seem like a distant dream for many. But boosting your savings rate, like building wealth, is a marathon, not a sprint. It's a steady, long-term journey, and it starts with taking one small step at a time. Every little action you take to save and grow your wealth is a victory. Whether it's cutting back on unnecessary expenses, finding creative ways to earn extra income, or being mindful of your financial choices, each step counts. Remember, Rome wasn't built in a day, and neither will your high savings rate. But with patience and consistency, you'll steadily make progress and inch closer to your savings goals. So let's start this journey together, one baby step at a time, and watch your savings rate soar to new heights. If you found this video helpful, please give it a thumbs up, subscribe to our channel for more content, and don't forget to hit that notification bell to stay updated. And feel free to share your savings journey in the comment section. You might inspire someone. Thanks so much for watching.